ASML just hiked its 2026 forecast for the second time this year and dragged the entire chip complex up with it. 4 more stories moving the AI tape today. Let's get into it. ASML posted 9.3 billion euros in Q2 net sales and 2 billion in net income, then raised full-year 2026 guidance to 43 to 40 billion euros, up about 16% at the midpoint, and said it will expand chip-making equipment capacity by 30%. As the sole supplier of EUV lithography for every leading-edge AI chip, ASML is the single cleanest red on the entire hardware build-out. That's why the beat lit a fire under the whole complex pre-market, dragging NVIDIA up about 4% and reinforcing the picks and shovels thesis. The bear case. This is the second hike in a single year, which sets a very high bar, and everything rests on customers actually installing that added capacity rather than digesting it. The forward signal is immediate. TSMC reports tomorrow. Confirm ASML's optimism, and the sector rally extends. Any softness, and this print looks like the top. TSMC is the make or break print, landing tomorrow, July 16th. The world's largest contract chipmaker already posted a 68% year-over-year surge in June revenue, and roughly $1 billion for Q2, near the top of its guide, with its N3 node sold out through year-end and 40 billion plus in AI chip revenue, on track for 2026. Analysts are treating this as the single most important read on whether the AI boom is still accelerating. It's the direct downstream check on ASML. ASML sells the machines, TSMC runs them. So a strong print plus raised guidance validates this morning's optimism. The bear case, at 30%, plus full-year growth already priced in. The bar is brutal. A beat may be the minimum required just to hold the tape. Watch the CapEx line. Guidance above expectations lifts the whole chain. Any hedging on AI order visibility hands the skeptics their moment. The memory complex led one of the sharpest chip up days of the summer, and SK Hynix screamed roughly 27% higher. 3 catalysts stacked at once: ASML's raised outlook, a broad KEYBANC price target sweep, and Tuesday's softer-than-expected June CPI, the largest monthly decline since April 2020, which cooled Fed hike fears. NVIDIA added about 4%, ASML 3%, and the narrative shifted decisively toward look beyond GPUs to the HBM and DRAM shortage. That's the key rotation. Memory, long the laggard, is now the tightest link in the AI supply chain. The bear case, a 27% single-day move, is a momentum spike, not a fundamental re-rate, and cooling CPI cuts both ways if it signals a slowing economy. The forward signal ties back to TSMC. If tomorrow's print confirms sustained data center demand, the memory bid holds. If it disappoints, today's move unwinds fast. KEYBANC supplied much of the fuel. A 5-star analyst turned decisively more bullish across the AI-semiconductor complex after Asia supply chain checks pointed to sustained data center demand, tight memory supply, and firmer DRAM and NAND pricing. The target sweep was aggressive. Micron lifted to $1,750 from YUT, AMD to $725 from FARTE, ARM to $430 from Cetra, Marvell to $400, and NVIDIA to $330, all overweight. The Marvell call is tied specifically to the Trainium 3 ramp in the second half and Trainium 4 share. This is the sell-side confirmation layer under today's rally. The bear case. Price target sweeps this broad tend to arrive near sentiment peaks, not troughs, and a $200 bump on AMD prices in near-flawless execution. The forward signal. These targets now need earnings to catch up. TSMC tomorrow is the first test of whether the supply chain checks were right. China's first national framework on human-like AI took effect today. The interim measures for anthropomorphic interactive services target emotionally engaging AI, and in response, ByteDance's Dubao and Alibaba's Qwen have shut down user-created AI agent and companion features. Existing agents have stopped functioning, with user data viewable read-only until October 15th. The mandated anti-addiction systems, usage notifications, and instant exit mechanisms are architecturally incompatible with persistent memory companions. The strategic read: this hands Western labs a product freedom their Chinese rivals now lack. The bear case: it's a fresh compliance overhang on Alibaba and ByteDance, narrowing their consumer AI surface area just as the category monetizes. The forward signal: watch whether this regulatory divergence widens the US-China gap on consumer AI design, and whether Beijing's next move extends these rules to enterprise agents, which would reshape the entire Chinese AI stack. One through line today: the AI capex trade runs on hardware, and every catalyst, ASML, the memory surge, KEYBANC's targets, now points at one event. TSMC reports tomorrow, and it either validates this rally or ends it. If you want the read the morning after, subscribe. This has been the Daily Alpha.